we've got Nagaraj Shetti as well joining in on the show right now to talk about his sense on the charts. But Nagaraj, let's talk about the Alco Bev stocks. United Spirits, Radico Khaitan. What's your reading?
Hi, good afternoon. The stock has Radico, in fact, has reacted sharply on the downside from the higher levels, and it has moved up recently quite a well. 2650 is going to be the resistance, and I'm expecting some more consolidation or a minor dip in the short to near term. I'm not expecting any bigger decline from here onwards. There may be a smaller consolidation as well.
All right, so that's the take coming in on Alco Bev stocks. Some of the other counters that are in focus today, you have KEI Industries also that's in focus on back of its earnings. You've seen that stock also see a sharp rise, 3% up move coming in for that one. You also had Polycab that came out with their numbers as well. And let's see where the stock is at this point in time. We did speak to the management about their numbers as well as the prospects. There you go. The stock is actually eased from those elevated levels. What's your take, Deepan, on this entire space, the wires and cable space? Because yes, they've been in focus over the last 2 months on the fact that you have new competitors that are looking to enter into that entire arena. But what's your take, looking at the numbers of Polycab, RR Kabel, or for the matter of fact, even KEI Industries, how do you think that this industry stands right now?
I think all the three listed players who have declared results on the cables and wire side have been very impressive. And clearly they're benefiting from higher real estate activity and increased distribution, and electrifications could be caused by urban expansion of urban areas. And some of it is related also to the kind of diversified power producers which are coming in from solar as well as wind energy side. So underlying growth dynamics are good, but these stocks are fairly valued. Like KEI and Polycab are trading at about 43 times. For a largely industrial player, I think that's on the expensive side. And there's, of course, the looming competition, which may hamper the margins and may eat into the market shares as well. So in my opinion, these stocks are pretty much well priced. And as a fresh investment, I'm not so sure. But given the kind of earnings momentum, I wouldn't want to sell also. So from our view, all of these three companies one should be held on to, and not to increase positions and not to even exit them.
Dipan, Buffett, in perhaps his last AGM that he addressed publicly, talked about the forever companies while he was talking about Apple, Coca-Cola, American Express. Give me some color on what are the forever companies that you're advocating to your clients, which you have been holding through for the last decade or more.
Okay, we are entering into compliance-related territory and usual disclosures, but I've always said that the 10-year companies which we have held are only three come to mind, and one is Bajaj Finance, the second one is Tata Elxsi, and the third one is PI Industries, and fourth one is Eicher Motors. So all of these companies have delivered like anywhere from 30 to 70 times returns in the last 10 years. And we continue to hold them. I'm not sure they'll give those same kind of returns going ahead, but I think still the growth momentum is pretty good. I have no new stock ideas for that matter, which I think I want to hold for like forever, but something or the other will emerge.
Wow, so that's nice, and that's good to hear the names that you've given out actually at this point in time, Deepan. But are there any spots which you are trying to avoid at this point in time?
So I think that's the stocks to avoid other software services companies. A lot of uncertainty over there, and with Trump tariffs and other uncertainties about their discretionary spends on tech may certainly affect their business. And on the whole, last 5-10 years have been pretty challenging, I think, for these companies, and we've seen stagnant profitability and growth. A lot of competition coming in from GCCs as well. So that's one sector we are avoiding. And we are just keeping a wait and watch on all export-oriented businesses, depending on how Trump tariffs play out. But other than that, I think we're pretty much positive on a whole host of sectors and stocks. It's just that this earnings season has been a tad bit disappointing, and various reasons, company-specific, industry-specific. But I do hope that all the kind of positive flips coming in through lower interest, lower taxes, better monsoon should play out and result in higher earnings growth, because otherwise the markets, they cannot rally from these levels. That's what my opinion is.
Quite interesting. That, of course, is the take on IT. But Kunal, you were of the belief that is finally getting into that oversold zone, and now you're going to see a big move come in these names. Are the charts still indicating that?
Yeah, very much. In fact, I would sense that maybe the worst for the IT stocks, at least looking at the short to medium term charts, I think is now over, because there was a point where the IT index was at 32,000 mark, where we flagged off that it's reached the extreme oversold territory. There was a lot of factors for the IT index. First, for example, the index was at an 8,000 to 9,000 point divergence from its 200-day moving averages. That's almost like a 20% divergence for an index, which is a very rare kind of a scenario when you look at this. And that too, the correction, or the major part of the correction, which had happened only in just the last 3 months prior to that. So that's one of the major reasons. And the other, then we looked at the factors where most of the large cap IT names, they were hugely oversold. And Infosys, HCL Tech, Tech Mahindra, etc. So there was a point where many of these IT stocks looked very lucrative. We've seen a point where over the last 1 month broadly, these IT stocks have rallied up 10% to 15%. From those points. So that, I believe, could be a strong indication that we are now into a zone where maybe the worst, at least in terms of the sharp reaction on the downside, could be behind. There could be a phase where these stocks may get into a pause, like what we are seeing right now, TechM at 1500 levels. Infosys also, I think, is showing signs of more of plateauing out. So the momentum is fading away, but I would still believe that there could be a chance that these stocks may first move up higher before they see any kind of a major consolidation.
So that's the take coming in on the entire tech space. But let me get some closing ideas then. What's your closing trade, Nagaraj?
Stocks. First one is Shriram Finance. The finance sector is looking good after a decent correction placed at the higher levels. This Shriram Finance as well, after the correction placed at the support of 200 EMA and bounce back, currently placed at the edge of moving above the gap resistance. Currently trading around 635. One can look to buy at this point of time. 670, 672 is going to be the next upside target, and one can place a stop loss at 620. And second one is from mid-cap space, Usha Martin. Usha Martin has been in a sharp downtrend over the last many months, lower tops and lower bottoms indicating, and which is the negative momentum in the stock price. Recently, it has formed a slightly higher bottom, and since then, it has been showing some confidence on the upper side. And currently trading around 306 level, one can look to buy at this point of time. Current price is 306.15, and the upside target would be around 330, 325 to 330 levels. One can place a stop loss at 295.
All right, so that's the closing trade coming in from Nagaraj. What about you, Kunal?
So I'll go with Aarti Industries. That's a chart which I think we flagged off a couple of days back on the chart busters also, that the stock is heading towards a classical breakout. There's been strong indication from indicators as well as from the price front. So at current levels of 450 thereabouts, I think still looks attractive for a potential 5 to 7% on the upside swing.
Well, L&T is all set to report its numbers. Dipan, wanted to get your thoughts in very quickly on the entire construction and infra space before we let you go.
Actually, very positive, and I think L&T's numbers also should be very decent. The order inflow is what we will watch, and that's been quite impressive. So generally very positive on the engineering construction companies, and after a lull which we saw after the elections, we should see a good pickup in order inflow and execution.
Okay, Dipan, great to speak with you. As always, thanks for your time. In fact, let me take it across to Kanishka from our research as well and help understand what to expect from L&T numbers and what her poll is penciling in.
L&T is all set to announce its Q4 results for FY25, and all eyes are on execution and order inflow for the company. Now, as per our analyst poll, revenue is expected to go up about 12% on a year-on-year basis to about 75,000 crore rupees. This is on the back of strong project ramp-ups in infrastructure and hydrocarbon segments. Now, execution momentum is also expected to have improved thanks to easing supply chain concerns. Now, EBITDA, on the other hand, is expected to come in around 8,040 crore levels, up about 11% on a year-on-year basis. However, margins, that could remain flattish around the 10.8% level as well, according to legacy fixed-price contracts, which may weigh on profitability. Now, apart from that, order inflows, which is a very key metric, are projected to range between 80,000 crore to 1 lakh crore rupees, driven both by domestic and international orders, especially in hydrocarbon and transport infrastructure projects. The street will also very closely watch for the management commentary on FY26 guidance, its capex plan, especially in the private sector. Now, apart from that, commentary on global risks like tariff impact, geopolitical volatility, and commodity inflation is something that the street is watching out for.